All right. Welcome everyone to Corner Class Tampa. So here's what we have today. This week I was in the community, we was doing our thing, and there was a recurring theme about rental rates, particularly in Tampa. Uh, there was two competing ideas. One was, are the rental rates too high? Are the landlords taking advantage of the renters? Second competing thought was, are the renters taking advantage of the landlords? It's really kind of depends on what side of the fence you're on. I did some digging and actually News Channel 8, shout out to News Channel 8, but they came out with an article basically saying that Tampa is ranked overall number three most overall overvalued rental market in the United States. So, to read specifically from the article, it says, again, this is from New Channel 8, um, in ranking by the Florida Atlantic University Real Estate Institution Initiative, an analysis of Zillow rental rates data was used to rank the metro areas that were most overvalued or cost more than they should. And the article goes on, and they ranked actually the top five. And number one, not to any surprise, is Miami. Miami, Fort Lauderdale. They say that the average rental rate, and I'm reading right from the article, guys, is average rental rate for Miami, Florida, Fort Lauderdale area. If you've been out to Miami, you know that it's beautiful. Fort Lauderdale, the beaches, beautiful people. I was out there, probably it's been 6 months since the last time I've been out there, and I tell you, it's really is a great place to hang out and have some fun. But if you got to rent there, if you want to stay, it's going to cost you. It's going to cost you. They came in at number one, most overvalued, and they said that the average rental price was is $2,832 a month. $2,832 a month, and they say that it should be average 2,320 $2,326 a month, and that worked out to be 21.7% over what it should be. Now, how did they figure out what it should be? Because capitalism is supply and demand. But when you have a very, very short inventory and you have a upwardly trajectory in demand, the rental rates are going to go up. That's just basic economics. Number two was Fort Myers. Average rental price $2,052 a month. What it should be $1,736.68. So $1,737 per month. Again, Fort Myers, another sun-kissed city, lots of beaches, beautiful weather. Yeah, that worked out to 18.16% premium, 18.16% more than this study says it should be. Number three is Tampa. Beautiful Tampa. We're downtown. You have the The water streets is just blowing up. New shops. Uh, right next door, you have the Tampa Theater, high end dining. You have Strass. You have shops that are coming to the area. It's really being revitalized, and they came in at number three. Average rental price, Tampa, Florida. This is where we live, guys. $2,029 even. That's the average rental price. What should it be? $1,732. Let's say it's $1,733. That is a 17.8% premium. I'm going to circle back to that. Number four was Sarasota, North Point, Bradenton. That came in with a 17% premium, 16.98. Then we have Point Lucie, St. Lucie. They came in at 15.61% premium. And as you read the article, it goes on and says how they came up with the numbers. And then the final analysis was compared to the rent of the rest of the United States, rent cost is much higher in Tampa. Nationally, rent has only increased 16.3%, and the average two-bedroom rent is $1,319 compared to Tampa. Average two-bedroom rent was $1,810 to be exact. So let's talk about that. Now, are landlords taking advantage of the rental population? Why is the rental population so strong in Tampa? Why do people continue to pay rent? Why not own? A few months back, mortgage rates, interest rates were, it was giving away money. 2%, 3%. You can literally buy a three-bedroom, two-bath home, modest three-bedroom, two-bath home for what you're paying in rent for a two-bedroom home. Banks was providing liberal loans, mortgages, but you couldn't pay for us, people that look like you and I, to get a mortgage. Even the ones that qualify. Now, I can understand there are people that will not qualify. There are people that, because of their history, credit history, maybe they had a foreclosure, some type of short sale type of arrangement. There's a rating period. There's some reason why they can't qualify. I get that. Maybe they don't have a down payment. Some of these payment assistance programs didn't quite work for them. I don't know. It's a lot of things there are a lot of moving parts, and there's a lot of things that in a person's history may cause them to not qualify for a mortgage, at least not right now. You can always work on it, come back in a couple of years, and try again. I'm not talking about that segment of people, those renters. I get that. What I want to discuss is the segment of renters that are able to rent, to get a mortgage, to own their home, own the piece of the American pie. Those are the people that we want to discuss. Now, when you think about that segment of the rental populace, the ones that can qualify for a home but choose not to, versus the ones that can't. If you can't, you can't. I get it. Do they choose to rent? Is that a choice? Is that a mindset? Do they not want to provide a stable income for their family? A stable income that will allow them to purchase a home and provide a roof over the family head and some type of legacy? What's the reason? I know that there's a lot of complaints. Now, that's one thing I do know. The the week was pretty interesting. I saw it from both sides. I saw a case study where there was a renter and female with a couple of kids and really needed to rent. Was in a situation where she was trying to get a house, saving up to get a house, and she needed to rent for this period of time. And then there was a landlord that was kind of on the other side of that equation. In full disclosure, we have a property management company. So we get a chance to see how people think and navigate from both sides, from the renter's point of view and from the landowners, the property owners' point of view, the investors in many cases. Investors want to maximize on their investment, get their ROI. And to be honest with you, over the last few years, it's been pretty rough with them. Let's talk about COVID and COVID from an investor standpoint. When we had a eviction moratorium, many, many renters chose not to pay rent, even the ones that were in a position where they could. Now I get it. The world was locked down. You had a lot of people that couldn't or needed some assistance. Again, we're not talking about those. What we are talking about is the renter that either was getting some assistance that did not go directly to the landowner or the rental going directly to the owner of the property, the assistance going directly to the owner of the property. It went to them and they chose not to give it to the owner. Now, it didn't happen to us, but there were some case studies where some owners in some of the other states that had very liberal tenant laws had to move into their property, maybe slept in the basement or something like that, because the tenant was not paying their portion of the rent, but the owner still had to pay the bank, which caused a serious financial hardship for the owner. Was that fair? The tenant chose not to pay their portion, but the owner, the investor that possibly had a hardship when they bought the property, rehabbed the property, fixed the property up, got it ready for the rental market, put a tenant in there. The tenant may have been paying for a year. Maybe they've been there for a year and a couple of months. COVID hit. I'm not going to pay them. Mr. Bank still want their money. And maybe the owner of the property, maybe their company downside. He had to still pay. rental moratorium. They eviction moratorium. They couldn't evict the tenant. Tenant rode out the system for a couple of months, maybe even a couple of years. Now, did the pendulum swing the other way? Are the owners being too greedy now? Supply and demand. Now the owner said, okay, okay, all right, you didn't pay me. You got me. But now for every tenant that wants to rent my place, there's not enough places to go along. I need to recoup my losses. I'm going to charge a premium for my rent. According to the article, that premium usually range from anywhere between 15% premium to 28%. Are they being greedy, or are the owners trying to recoup their losses? Now, what is a renter to do? Well, luckily, the government the government is trying to address the issue. They are nationwide. They're seeing that the rental rates are overpriced. Everybody seems to be taking a premium nationwide. And for the people that are receiving substance assistance with their rental rates, those guys are getting a little help. Let's take a look. So this is the latest rental assistance that came from HUD today. Actually, we received it today, and I know I have the screen. You can't really read it. I actually, some of the more popular areas, we're going to talk about those in detail. But in a nutshell, this is nationwide. You get your state, Florida, and I pulled up the assistants that are in Hillsborough County. And as you can see, if we go through it, the first area, it goes by zip code, guys. And so they have a zip code, and then they have how much assistance is available, maximum assistance is available in that particular zip code. And what we have in Wesley Chapel is 2 bedrooms. You can get maximum $2,170 a month assistance. Section, it is a Section 8 people typically, and you get for a 3 bedroom 2,780. That is a significant jump from what it was last year. So credit to the government. Shout out to Tampa Housing, and shout out to some of the other assistance places, because really for the ones who did nothing wrong, the tenants who are not in a position to buy, and they went through the Section 8. I'm sorry, they went through the COVID, 2 years of COVID. The Section 8 people paid the owners. They didn't destroy the houses. They're doing their part. They're doing their part. Those guys are getting some assistance. Wesley Chapel, $2,170 for a 2 bedroom, and $2,780 for a 3 bedroom. Okay, let's look at another popular. Downtown Tampa. Downtown Tampa. That's where we are. That's where my office is. Downtown Tampa, we're going to find to be one of the more expensive ones. This makes sense because we're downtown. We have walking distance to everything. City of Tampa court house, the City of Tampa government is right next door. Banking is next door. I can walk to UT. Fine dining, high-end hotels is right behind me. Water Street, all of that. USF, all of that. So I would expect that we're paying the premium to live here. So if we look at the rates, 33602 downtown Tampa, we have 2 bedrooms, $2,490 a month in assistance, and 3 bedroom, $3,190 per month. Now the question is, can you live downtown off of that? Now we didn't pull up the downtown rental rates. That would have taken this. We already 26 minutes in this video. It would probably be another 2 hours for us to go through the rental rates. But in general, I think that we probably could find something in the 33602 zip code, 2 bedroom, 3 bedrooms. That's the new rate. All right, let's go look at Hyde Park. Right down this way, Hyde Park is maybe 3 miles away from here. You have access to UT, the square, very, very, very nice theater that's there, good eating, shopping, meat market. All shout out to meat market, shout out to all those high-end restaurants. Very nice area. 2 bedroom, $2,230. 3 bedroom, $2,850. Hyde Park. Can you live off of that? That's the question. And when you think about premium space, living space, you're in Tampa, you're thinking about South Tampa. Boutique, eateries. I guess I'm a foodie. Everything I say is hey, great place to eat. But it is. There are a bunch of places to eat. So in South Tampa, you got 2 bedrooms, 1960. That's a little bit surprising. And 3 bedrooms, 2,510. So I would venture that there are more supply in there that is driving the rates down, the rental rates, and you need less assistance. But that was a surprise. When I did my research, I kind of thought, well, downtown, you 3 bedrooms were over 3,000. Surely South Tampa, 3 bedrooms were over 3,000. But we're looking at 2510. 2510, South Tampa. And very popular East Tampa. East Tampa is a growing community. There's a lot of things that's going in East and West Tampa, to be fair, East and West Tampa. We have the Rome Yard Project, West Tampa. Some of the major nonprofits are doing big things in East Tampa. Shout out to CDC. East Tampa, you're looking at 2 bedrooms, 1,440. 3 bedrooms, 1,840 per month. Now, East Tampa is what I want to talk to you guys about, because that is our case study. We had a landlord that had a 2 bedroom and wanted $1,600 a month for it. It was done, to be fair. It was in good shape. They just did a rehab on it. Fresh paint, fresh appliances, nice backyard. $1,600 a month. Now, before this, you had a hundred and something, a little less than $200 bump from last month to this month for that same zip code. Fresh paint, redid the kitchen, brand new appliances or newer appliances, decent sized rooms. But he wanted $1,600 a month. Was that fair? Should we even judge him? Is it a situation where it's a supply and demand issue? Will the market adjust the rate? We do know that for people that are receiving government assistance, they couldn't live there because the maximum that they would receive is 1440 for a two-bedroom, which it was. And you can't in these programs. It's all about helping the tenant with the idea that it's providing them a nice place to live, a good place to live, solid roof over their head, and it won't break the bank. Again, the idea is that it will not overtask them or overburden them, so they eventually can save up their money from the break that they're getting from in their living expenses, so that they could find save their pennies up and then find a place to live, to purchase a home. That's the plan. The plan was never to stay on an assistance for generations. So you have these assistance that you get from the government while you get yourself together. Ideally, this is the ideal situation. You get yourself together and then you buy a home and you get off the program. And with that mindset, with that thought in mind, they don't want the tenant to pay the difference to the homeowner because that is kind of defeating the purpose. And then also it leads to a lot of abuse because now the landlord can say, okay, well, I want $1,800 a month. I want the tenant to pay $400 on top of that of what the assistance I get from Tampa Housing. That's not right. That's not what we're supposed to be. That circumvents the intent of the program. So the tenant is not supposed to pay the landlord the difference. So what that means is that for this particular zip code, if this particular landlord wanted 1,600 a month, Section 8 pays 1,440 a month. That difference, tenant's not supposed to pay that. Nope, tenant's not supposed to pay it. So now the landlord said, well, hey, we'll just rent it to regular people that are not providing assistance. Okay. Okay. That is your option. What's another option is that tenant that's paying $1,600 a month feels that that's not the value for that property. And now you have a situation where you have an unhappy tenant, potentially, and you may have some turnover in that property. So that's the give and take. When you hear investors and gurus talk about what the market would bear, that's what they're talking about. The market is saying, hey, listen, for this location, for this property, we think market that the rate for this property is 1440 a month. The owner is saying, no, the rate is 1,600 a month. And what happens is that when you have a lot of turnover with the tenant, owners should get wiser and say, you know what, I'm having a lot of turnover, which is costing me money because we have to place a new tenant in, we have to repair whatever damage that the tenant did, we have to put new paint in, we get to get a new tenant, and then 2 months later that tenant is moving out. But if we was to move the price down to 1,400 a month. Now you have a stable tenant there, and that tenant stays for a couple of years while they're getting themselves together to purchase a home. No turnover. Tenant feels like they got a deal. It's a win for them. The owner don't have any turnover. They have a solid rental income for their rental property. It's a win for them. Win-win. The market sets the value of the price of the home, whether that home is a rental property, whether the home is a a the seller is selling it to the open market for with a mortgage to a traditional buyer. The seller may wants to, okay, well, I got a brand new home. Let's say the same area. Let's give another scenario. Same area, 33610. The homes in the area typically goes for, let's say 3 bedroom, 2 bath, 300,000 to, let's say, 350, 350,000. Someone comes in and says, I'm going to build a home that's 700,000, right next to a $350,000 dollar property, right across the street, 350, right next to them, 320. No homes on that street, or in a 3 block radius that's over 400,000. But they want to build a home that's 700,000. Guess what? That's outpriced the market, and the market would tell them that they're going to have a serious problem trying to purchase. I'm sorry, to sell that home to a potential buyer. The buyer says, "Wow, yeah, it's beautiful, it's bigger, it's nice. I like the granite, I like all of that. But right next door, there's a $400,000 home. That's a 200. That's a 350. Wow, you mean we're the only home on the block that's over 500,000? Market gonna say, nope, 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 not good. So let's go back to our original premise. Are rental rates too high? It all depends. Will the market bear the new rate, the increased rate? The report said that Tampa is number 3 with a premium. Will that sustain? Well, like I said, the only thing and the only one that has the answer to that is the market. Stay grinding.